Today, chasing our tails, your burning questions answered. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. It's a Friday. Tarric Brooker's with me once again. Hi Tarric, how are you doing?
Yeah, pretty good yourself, mate.
Yeah, very good, very good. But there's so much going on. And what I love about it, Tarric, is that the data's pointing like that, right? Nobody quite knows what's going on. There are so many countervailing forces. You know, the ECB put their rates up unexpectedly. Inflation has started to sort of wobble the wrong way in the US. There's discussion in the UK with massive growth in wages as to what they're going to do. Wherever you look. And then in Australia, well, what do you say about Australia?
Well, it's interesting, isn't it? You know, on one hand, we've got, still relatively low unemployment, still, another bumper jobs month for the seasonally adjusted number, as you and I said would happen. Once again, the sort of, people saying, oh, it's all over, we need to cut rates right now were wrong. And then on the retail front, that performed relatively well. And then also the ABS came out and said that we have the most explosive net overseas migration in Australian history earlier this week. And, well, we all know how well that's working out.
I'll tell you what, one of the interesting about the latest numbers with regard to employment was they actually dropped the total number of households in Australia by around 22,000, I think it was, right, this last month. And they argued that they did that because of the results from the recent census. And I'm thinking, well, hang on a moment. On one hand, you're saying we've got massive migration, more than ever before, but you've actually reduced the total number of people in Australia, which means that you're actually upping the number of employed people because that's a data point that exists. So actually, there's an interesting contradiction then in those two numbers.
Yeah, although the ABS has had a few issues, in recent months. There was the issue with the lending finance data where they basically came out and said that all the first home buy data over the last 12 months needs to be taken with a pinch of salt, and that there's some fairly serious, major issues in that regard, and that they're suspending it until they can fix it. So, they have an unenviable job in that regard, in the sense that they've got to do, all this work on an increasingly tight budget. So, I guess these things are par for the course. Although by the same token, you look across the Pacific at the American employment numbers, and they're being revised like crazy. So, and on the other hand, Australia's employment numbers have been revised up. So, it's really quite interesting to watch.
And what I chuckle about is, of course, everyone's saying, oh, we're being data dependent. But of course, they're hanging their strategies on data, which is actually wobbly and flawed. I mean, it always is. But actually, the more data dependent you become, the more you're actually being tossed around by these currents in terms of the data. I just wonder whether we've actually got to the point where central banks are now over data dependent.
I think that's the case to a degree. And I think part of the problem is that the data is in a lot of ways distorted. It's distorted by, various different things. Say, for example, here in Australia, we have the monthly inflation data, which the ABS says to take with a pinch of salt. It's not updated. Not all components are updated properly. It's not a full proper monthly index. But, they came out and they said, well, we're adding holiday travel to the volatile items category because it's distorting the crap out of the data. And it's distorting the crap out of the quarterly data as well, but just not to the same degree. And, I think that's just a perfect example of the way that something can just make something seem worse than it is and then better than it is. Because on one hand, during the end of last year, it made you saw inflation absolutely rocket up during the December quarter and during the month of December because of holiday travel, costs. And now we're seeing the downside of that, and it's just... it's made things seem like we've made a lot more progress than we actually have. And in reality, we've made a lot less progress than that. And it's a similar story in the US, with things like, say, used cars. The drop in the price of used cars is distorted inflation lower. And then the rise in used cars distorted it higher. And, we've seen that also with things like fuel prices. A lot of people have been hanging their hat on the headline inflation figure, which has been very much defined by fuel prices, and now they're rising again, I have a feeling a few people are going to change their tune and say, well, no, it's not about headline inflation anymore. It's about X volatile items, or it's about the trim mean. Whereas you and I have been talking about things like core inflation and X volatile items this entire time. So it's about, consistency rather than just, that data point looks good.
Well, and of course the other side of that is the markets themselves are, confused, because if you think back earlier in the year, everyone was saying, we're going to get a huge downturn in the US, it's coming, and then it wasn't coming, and then, no, we won't, and then it's, we're going to have a soft landing, and then we're going to have no landing, and now we're back to a soft landing, and now we're talking about, maybe the recession is still to come. And people are saying also things like, well, maybe there isn't a lag, maybe all of those levers that have been pulled from an interest rate perspective have already played through to the economy, and other people are saying, no, you've got another 12 to 18 months to wait to see all the impacts come through. So, the markets are completely confused as well. So wherever I look, I see confusion. I see central bankers not clear about what they're doing. And I suspect, I was interesting, Powell was talking about making decisions under a cloudy sky, trying to spot the stars through a cloudy sky. I thought that was quite a good analogy. It's foggy out there, mate. It's foggy.
Yeah, it really is. And I think the problem is that we're still operating under the same set of assumptions and the same, so we say, playbook as we have in past cycles. And the reality is that this isn't like past cycles. It's not like past cycles at all. There are, for example, there's the demographic changes, there's the changes to consumer attitudes and consumer psychology because of the pandemic and how that's altered consumer spending patterns wildly compared with the way things would have played out before. But then there's also the impact of QE, of corporate bond buying, which has suppressed the cost of corporate bond of corporate debt servicing, which is having a significant impact on the pass-through and the effectiveness of interest rates on hitting corporates and hiring and the labour market and wages and all those different things. And here in Australia, the RBA have also impacted the way that the system works and the way that monetary policy functions by handing out all that TFF money and blunting the impact of monetary policy because so many people had fixed rate mortgages. But it's also the fact that that over the last, what was it? It was about 9 years that they cut rates prior to the pandemic, that during that time, a lot of people got ahead on their mortgages. And so monetary policy is much, much less effective than it would have been if you had seen this sort of degree of rate rises under a different monetary policy environment, one that wasn't, sort of defined by a decade of dovishness.
Yeah, it's interesting because Phil Lowe in his final departing remarks made the comment about, well, maybe the relationship between fiscal and monetary has to be thought about differently, because essentially there are some limitations to what monetary policy can do, particularly now, for the reasons you've just said. And of course, politicians want to wash their hands of interest rate settings, and it's not our problem, it's somebody else's problem, right? Because they can then blame somebody else, whereas in fact what Phil Lowe was saying is actually maybe the right answer is a more integrated view of the two. Although I have to say that my concept of giving central bankers more levers, they haven't done that well with the monetary policy levers. You want to actually now talk about offsetting fiscal levers that automatic stabilizers and adjusters, which is what some people are talking about. I'm not sure that giving them more tools is actually a good thing. No, they haven't managed things terribly well, but I think the problem is that we are in a world now where, all you've got to do is say, look at the US deficit, for example. It's off on the moon. Australian government spending is off on the moon. Okay, we are in a position where we can afford to pay for it because of, the various commodity booms and etc. But, government spending is off on the moon compared with where it was previous to the pandemic. And the thing is, the politicians don't want to take accountability for that. They don't want to take accountability for anything because, we're here
and Powell and everyone is, say, for example, in the US, they're all scratching their head, why do we have inflation? And then you look at the deficit and you go, well, because you got an enormous deficit, you idiots. It's heaps bigger than it was prior to COVID, and it's heaps bigger than what you would expect in an economy that is, that was up until relatively recently booming. So I just think that the problem with, the sort of normal counter-cyclical, monetary and fiscal policy, which is basically, when the economy is weakening, you spend more to stimulate the economy, and when the economy is hot, you take out that spending because the economy is more than capable of supporting itself. So, yeah, I think the problem is that there's no one in the world of policymakers that can really be trusted with that power.
Spot on. And if you add central bank digital currencies, which are also being claimed as another set of tools, look at what the Federal Reserve has been saying relatively recently. Yeah, do you really want to give them more tools when, in fact, so far, I haven't been convinced that they've actually necessarily done the right things. I think they took rates too low. They reacted too slowly to the inflationary forces. As we said, monetary policy is now less effective because of all those other measures that were taken. And net, I just wonder whether the whole edifice is, a bit wobbly. They're all going to try and keep it going, right? Because the last thing they want is to collapse the financial system. But at what cost to ordinary people is my question.
Well, I think we've been all finding that out to varying degrees over the last, what is it now, almost 15 years since the global financial crisis, because, we've consistently found time and time again that the economy doesn't work for regular people anymore, because the pathway that policymakers, both fiscal and monetary policymakers, have chosen is no longer derived to benefit the average person. Because, when you see, you see a central banker or you see a politician get up and say, look at what we've achieved, it's very rarely something that's actually anything approaching an accurate representation of the experiences of the everyman in the street. Like, say, for example, here in Australia, real wages today are roughly where they were in 2010. It's a similar story for real household spending. And it just goes to show that these settings don't work, even though you've got all manner of people celebrating how Australia is the lucky country. And we are lucky in aggregate, in terms of headlines, but for the average person, the last 10 years have been nothing like the previous 10, or even the previous 10 before that.
No, absolutely. I agree. It's certainly a very uncomfortable story, and it's being played out not only in Australia, but in other countries too. Anyway, we better get on, because otherwise we're going to be making a 4-hour show rather than a 1-hour show. We actually asked a few people to throw questions in, and we got... You were swamped, mate. You were swamped.
Yeah, if we get through them all, I will be very surprised, but we will do what we can. And for those that we miss, we will try to get to them in a future show, although there's always more questions, so we'll get to the slides.
Well, I love this one.
As usual. Yeah. Well, it's accurate for too much of the world right now, unfortunately.
Yeah.
As usual, the slides will be available at avidcom.substack.com if you would like to have a look, or if you would like to share them, etc. I do try to link to the sources wherever humanly possible, so if you want to find them, or if you want to credit them, feel free. And I just want to say thanks to everyone who has supported my work recently. It is all very, very much appreciated, and it helps me keep doing these shows and keep on keeping on. So without further ado, we'll get into the slides and the questions. Okay. Crypto Mori asks, the bill that recently passed through Parliament had some literature with it that estimated that we would require 891,000 additional social housing and affordable dwellings between 2020 and 2040. And over that time, it would cost $290 billion. Should we have a much higher target instead of the $10 billion currently committed to the Housing Future Fund?
Well, that's a very, very good question. Just be clear, the $10 billion is the capital amount that's actually going into the investment fund, right? What's going to be funded off the back of it is the interest earned on that investment. So it's not even 10 billion to start with, is it? It's a much smaller number. And of course, you are also in the vagaries of what might happen to investment markets over that period of time. So to my mind, I think I said in a couple of past shows, this was an announceable. In other words, it sounds as though we're doing something, but we're not really doing much at all. And if you look at that slide there to show you what you actually need to do to be able to really get to the point of dealing with this, I mean, the 10 billion and the surrounding shenanigans is, well, it's in the roundings, isn't it?
Pretty much. I mean, they've basically committed, but aside from the $3 billion that they've already committed through the additional $2 billion social housing accelerator, which provides money to the states, and the additional $1 billion that the Greens managed to wring out of them. So that's $3 billion, and then about $500 million a year, which will come from this fund, which is roughly the estimate. And they've pledged that will happen, but we'll see. But I think this illustrates nicely that basically. And this is based on data from 2021, and it's actually looking at data realistically from 2018, 2019, considering how long these things actually take to get done. And I think it just goes to show that this is based on the immigration and inflation estimates of the time. So they didn't know at the time that Albo was going to turn up immigration to potentially up to 500,000 or whatever it'll end up being for this financial year. It's already up to over 450,000 on a rolling 12-month basis. But I mean, I just think it just goes to show that this still basically says that we need $5 billion a year, and the goals of this particular piece of literature, which accompanied the Housing Future Fund bill, is basically to get homeless people off the street. And to minimize the effects of those issues. And this isn't fully fixing the social housing problem, and it's not taking social housing as a proportion of housing stock back to even historic levels. This is still nowhere near the normal. The historic level of social housing that was seen, say, back in the 80s, and it's a whole hell of a lot lower than what you saw, say, back in the 50s and 60s. So. Yeah, we're in a different galaxy to what we actually need. And like I said, this is all before Albo turned the immigration knob up to 11. So we're already in a position where we needed to be spending, $5 to $7 billion a year. So with the population growing so fast, it's probably even more than that, just to really sort of tread water in a positive place.
And just to be clear, the inflation assumptions that would have been plugged into that chart, which was before the real peak, right, is so much lower than the real building cost inflation currently, even looking at the moment. So you'd have to assume that 293 billion is way, way understated even to do that. And then you've got the inflation overlay relating to the more people coming into the country, which is a lot higher than expected too. So, you're probably looking at double that number to actually get close to anything realistic. And for me, the real issue is this, Tarric, that trying to solve housing affordability by throwing more money at a very small part of the problem rather than tackling the fundamental problem of housing affordability is actually the flaw in the strategy, right? There's a reason why house prices have gone way off the scale. Poor lending standards, the ability to be able to securitize and all of those other financial engineering things, the deregulation that happened as well. There's a bunch of reasons why we ended up in this situation that we're in. And just to be clear, to remind everybody, a lot of people who are borrowing today are borrowing at multiples of 4, 5, 6, 7, 8, 9 times income, way higher than previously. And there's your problem at the end of the day. And then they throw, bones to first-time buyers to try and get them into the market. They try and do a little bit over here in terms of, social housing. And it's all about seeming to be doing things. Nobody wants to tackle the fundamental issue, which our property is way overvalued relative to incomes. And until somebody actually decides to tackle that seriously, it's going to get worse.
Yeah, basically. And I mean, I think that we've sort of arrived at a situation where a lot of people sort of see property as a government-backed wealth creation scheme, and as long as that continues, and as long as the proportion of housing stock owned by property investors continues to grow and grow and grow, you're stuck with where people are competing against investors just to get their foot in the door to buy property. And the problem is that they are competing generally, in a lot of cases, in that same segment. So it's a real mess like that. And just, one, little additional tidbit. Back back in 1995, under 20% of housing stock, there was a little over 19% of housing stock was owned by property investors. At the peak prior to COVID, it was 27%, and I wouldn't be surprised if it was higher than that again today. And I think that just goes to show that, we managed to get by with fewer property investors in the past, and rents didn't explode, and, the economy didn't, fall over and then catch on fire. We managed to get by just fine. And that was actually some of the most prosperous times in the history of Australia. So I think this idea of, the investor exodus and all that other stuff like that is just nonsense. Realistically, what we need is lower prices, not more investors. We've done that over the last, 30 years, and it hasn't worked.
I agree. It's got to be on the price side of it. And interestingly, just to remind everybody, there was in the census 1.2 million vacant properties across Australia. And we all also know that some of those are actually held by overseas people with no intention of actually living in them. They're held as long-term investments. Now, there are other reasons too, but quite a few things. And the other thing is the Airbnb story. There's some data from the US where they've actually started to clamp down on Airbnb. And suddenly, there's been a growth in first-time buyers getting into the market. Prices have actually adjusted down. And so, there are levers you could pull around Airbnb, around property vacancies, and maybe also reducing some of those investor incentives, which are still huge, if you were really serious. But I come back to this point. It's funny how many politicians have got multiple investment properties. So, they're not going to do much, are they?
No, and I think that's a good, just talking about how there's levers that you can pull. I think that's a good segue into the next slide. Okay, now this is a chart of Sydney, Auckland, and Toronto housing prices. And what I've done here is month 0 is when they bottomed. Auckland prices bottomed 11 months after the borders reopened, Sydney prices 10 months after borders reopened, and Toronto 9 months after migration was accelerated to above pre-COVID levels. Now, obviously, there's been, there was varying lag times because obviously conditions were different. New Zealand had the most stringent, Canada had the least stringent, and they still had continued migration even prior to this run-up in migration. But the reason why I mention this as a lever, this is really the only lever that Anglosphere governments could pull that wasn't inflation, that wasn't directly highly inflationary, to support the property market. And that's exactly what they've done. And once you create a rental crisis bad enough, or you exacerbate an existing rental crisis, you drive a situation where people feel they need to buy. And also just the fact that there's, by the number of migrants, while the vast majority, probably, well over 80% will not be buying in the next 12 to 18 months, there will be a proportion who will. So this has really put a bit of rocket fuel under various property markets. Although, as the graph shows, that rocket fuel is starting to run out in places like Toronto.
Yeah, absolutely. And just to be clear, the impact of migration firstly impacts the rental sector because people come and rent temporarily, but then people move on and then, buy. And quite a few people who are now coming in are actually able to buy and therefore are putting us sort of support. Though it's interesting, as you say, it's beginning to conk out a bit in some places. I think that's probably the impact of these higher interest rates, because those interest rates, as we said earlier on, takes time to trickle through because a lot of people are on fixed rates and those sorts of things. So my own suggestion is that we are going to see prices sort of slide a little bit further. But in Australia, it's going to be supported by that massively high migration, because migration creates more demand for everything, including property. And guess what? Big business want high migration, because it's the lever that they've got. Government wants high migration because they get more taxes and they can keep the GDP gross number growing. And that sort of is one that people get fixated on, while GDP per capita is just shuffled away. Oh, it's not relevant anymore, right? So this is a signal that people should be, I think, reacting to. But of course, government don't want to react.
Yeah, it's a bit of a mess, really. And I think that, they've pulled this lever, the only lever they have, and they've pulled it very, very, very hard. And I mean, the ironic thing is I mean, I remember saying about Albo and towards the end of 2021, isn't it great the fact that he's opposing Morrison's migration increase to 160,000? And I remember saying, yeah, well done, Albo. And, and we're in a different galaxy now. And it's sad that I think that people have been thrown under the bus in the name of protecting the housing market. Although, I mean, it must be said that this is not a unique thing. It's been done in Australia, it's been done in New Zealand, in Canada, and even to a lesser extent, the UK.
Well, I'll be a bit controversial. I would argue that it's Treasury that actually own this, because the uniform connection between both sides of government is the Treasury groupthink, which of course is strongly neoliberal, strongly market driven, and all of those other philosophical points that we've touched on. It emanates out of Treasury. And actually, I think that what you find is that when you're out of government, you can have those thought bubbles, but when you get back into government, you then sort of clamped into the Treasury straitjackets. And around the world, I believe that what we're seeing is this assertion of these particular policies that actually are being played out again and again and again in multiple countries, and actually it's the Mandarins that are really in control. Well,
that would be frankly horrible. I mean, the issue in all of this is that this is just hurting. This isn't just something that hurts renters. It's something that ultimately ends up hurting the vast majority of people. Now, unless you're someone who has a bunch of properties, or you've got a bunch of different stores or something like that, even that really, you're not going to be benefiting from this. You look at, per capita household consumption broken down by age group. Yeah. Unless you're someone who's equity mating themselves to, up to the Gold Coast, or equity mating the grandkids to Movie World or whatever it is, this isn't benefiting the average person. Like we see with even real wages in aggregate, we're all going backwards together, and that's including quite a few people at the top end who are doing very, very, very well. And it's a similar story with things like, household consumption and, per capita in real terms and all those other things. Things are not going well. And I think that that's something that really just needs to be emphasized for people, not just people who are doing it tough, who I feel need to be told that they're not just failing, and that it's not just them, and it's not just, them not working hard enough or them not doing enough. Because a lot of people will get told that, and that's absolute bullcrap. But I think even people at the top end of things who are doing well need to be told that your experience is not defining for the average Australian. Absolutely. And I think that some people need to think about that before they open their mouths. Because it's not about my experience or your experience or any other individual. It's about that collective experience being had by the everyman. Okay, I might be doing better than you might be doing better. Someone else might be doing better. But that doesn't matter to what's happening to that person on the street.
Absolutely right. And, if you look at averages, of course, averages mask. But when you actually start teasing out the data, then you see these polar opposites. Small proportion doing really well, a lot of people doing really badly, and some people in the middle thinking they're doing reasonably well, but actually still going backwards. So the truth... Sorry, the dogs are making a bit of a noise. The truth is the economy isn't working for ordinary people. And unfortunately, the truth is that maybe a lot of people in positions of power aren't interested in an economy that works for ordinary people.
No, I spoke to someone the other day with some political connections, and they said that part of the problem is that once you acknowledge a problem and you talk about a problem as a politician, you then have to actually address the problem. And that's, I think, what we're seeing. You see, say, for example, the Albanese government are focusing in on social housing and building more of it. It doesn't matter that that's potentially not going to be enough to keep up with the population growth, and in net terms, it might even end up being, leaving people worse off. But that doesn't matter because they seem to be doing something. And looking at the polls, that's enough.
Announceables, mate. It's all about announceables, right? Seem to be doing something even if you're not really doing something. It's a bit of an Australian disease.
It is, and we should probably move on to the next slide. Okay, Liam asks, how high will the retail cost of fuel go in Australia, and what pressures will this put on the economy?
Higher and significant pressures. What I find fascinating about this particular story is that we're seeing very strong prices, of course, of fuel internationally. The exchange rate is working against us too. So in Australian terms, people are now paying pretty much what they were paying at the peak. But the point is, this is still a foundational cost pressure because a lot of things rely on getting about. And so therefore the energy costs don't just stick in one sector of the economy. It actually flows through very broadly into many other sectors of the economy. So to my mind, this is a really important inflationary force. Though I'm fascinated by, for many analysts, they exclude the volatile fuel prices, but forget about the second order impacts, which are huge.
Yeah, I mean, personally, I do prefer the core index, mostly just because it does smooth out those month to month issues. But I do see your point, and to the question, I think that it's going to really, it's a bit of a sort of how long is a piece of string sort of question, because there are so many very different inputs to this. If Russia and the Saudis and the other elements of OPEC plus continue to basically keep a stranglehold on oil prices and keep cutting production where necessary, then yeah, I mean, things like $100 a barrel oil can't be ruled out, and that could potentially see Australian petrol prices up towards $2.40, maybe even $2.50 in some places if we do really start to see this big push up in oil prices. And it also depends on the strength of the Australian dollar. If it continues to weaken and weaken significantly, then it could push up prices even more. But I mean, I've done a little bit of work on just average pump prices nationally and contrasting that with the ABS data for this quarter last year. And you're talking about 0.2 to 0.3% year-on-year contribution from fuel feeding into the CPI, depending on when the sampling time is and it has been done, and how all that plays out in reality. But I think that's something that really needs to be kept in mind going forward, because up until now, fuel prices have really been a downward year-on-year pressure on the CPI, whereas heading into the future, they could be once again on the rise again.
Well, that's right. You're talking about the base effects, right? So basically, if you have big spikes previously, they eventually drop out of the numbers, and we saw prices coming down. So therefore, that was a supportive. But now it's starting to go up again. And in fact, more broadly, there are some other base effects that are also dropping out from back then. So I have this view, I've had it for some time, that we're going to see it very hard for inflation to continue to come down at all, and in fact more likely it will go up again. We saw in the US it went up this time around. So yeah, base effects can be positive on the way down but negative on the way up.
Yeah, I think another just sort of a bit of a side note, another big one is going to be the cost of constructing a new home, because that has been a significant driver of inflation firstly, and then of disinflation more recently. So I think as that has come down, and we are going to eventually see it normalize, the big question is where. If it normalizes somewhere around about sort of 2.5, 3.5, maybe even 4%, then that's going to be really, really hard, because it is such a large component. It's going to be really, really hard with all these other baked in inflation pressures and things like rents and electricity and everything else to get inflation under control.
Yeah, and two quick points on that. The first is that the ECB was now talking about, well, we probably don't need to put rates up higher now than where they are, but they're going to have to stay high for longer. So the assumption is that we're going to have those interest rate pressures continuing. But with these other factors now coming through, they did admit that there was significant upside risk to inflation, specifically from the energy issues, which of course is gas and also the petroleum products. And it's worth just reflecting on the fact that the Western Australian strike, when that was sort of announced, put about a 10% premium on LNG immediately globally. So you can see how those one event can significantly impact the inflationary pressures. So to my mind, the job of getting inflation back to 2% just got significantly harder.
Yeah, I concur. It's gonna be a challenging one, and I think it always has been. But I mean, I guess it's just easier for folks to just say that, we're gonna kill it. It's not gonna be too difficult. But the reality is that if you look at, say, for example, that price of fuel chart there for Sydney, if you look at previous cycles, high prices, say like the one during just prior to the financial crisis, that was killed off by a recession. And if you look back far enough at fuel prices and energy prices over time, generally high prices are killed off by recessions. So I think that that's something that sort of just needs to be kept in mind, that is how inflation, not just fuel price inflation, but inflation more broadly, that is how it is historically dealt with. So well, someone eats a recession. It's just a question of who.
And just one other point, didn't they reduce the tax on fuel when it went up very high last time? I wonder whether they'll do the same again, or whether they will say, well, we can't this time because the budget is, wherever. That's another factor to bear in mind.
Yeah, exactly, 100%. That is, a distortionary factor, and yep. I wouldn't be surprised. I mean, to be honest, they've got the scope to do it. Yep. I mean, it'd be inflationary technically, but what do you, they need a political win. Because if the polling for The Voice ends up, is correct, and it ends up, blowing up in their face, and it ends up failing really badly, they're going to need a win from somewhere.
Yep. No, I wouldn't be surprised to see the petrol lever being pulled, the tax position. As you say, they have the capacity to do it. But it is just worth understanding that wherever you look, you start to see more inflation bubbling along. And interestingly, of course, the services inflation, which is linked to wages in some countries, is also now going up again. In Australia, not so much. In fact, wages growth dropped back a little. But I'm still watching that because I suspect that could be another source of inflation too. So, yeah, interesting. This is going to be a long game. This isn't going to be a short game.
No, I concur. Okay. Electrofried asks, is there a serious risk of a flight to bonds by existing property investors due to the low yields on property while there are significantly greater on bonds, especially considering that many investors are older and more risk averse now?
It's a very, very good question. Certainly in my surveys, I'm seeing quite a few property investors doing the math on their investment property for the first time, because of course now the prospect of significant capital growth is dissipating, certainly in the short term. And when they actually look on a cash flow basis and take account of the full cost of the property, 60% of investment properties are underwater from a cash flow perspective. So there is definitely now an alternative, because at the moment you can actually lock into long-term bonds and get a very, very good yield. And of course, it's relatively risk-free, particularly if you go into government bonds. So relative to the risks around the investment property and all the issues around it, compared with bonds, which can be more liquid, I would have thought it would be quite an interesting substitution question.
Yeah, I think that the thing is that there is that appeal there, and I think the demographic point is a quite poignant one in that regard. Yeah. And I think just even just looking at that CoreLogic chart there on the right, that chart I think tells the story of demographics. You can see that the proportion of investors selling properties over time is rising, and you can see that the proportion of people who are older, who have property, the number of landlords by age is rising as well. Now, obviously, some people clearly are holding onto these properties, but then there are others who aren't, because, the appeal of negative gearing loses its luster when you don't have the income to offset it against. So, yeah, I don't think that there's risk of a sort of mass exodus, so to speak. Well, there's always a risk, but I don't think there's an especially severe one. I mean, depending on what happens with the market. But even in New Zealand, we've seen prices absolutely go through the floor in a lot of places, and we haven't seen the exodus there. And so, I think, and not only that, but they don't have negative gearing to insulate them either anymore. So, yeah, I don't think that it's a huge risk, but I think that we are going to continue to see these demographic forces push more investors out. But then by the same token, if you look at the numbers and of things like housing finance commitments, there's just as many coming in, so it's really a bit of a wash in that regard.
And I'll make one final point. Again, from my data, a lot of those older property investors already have other finance investment options. So they haven't spent all of their money on investment properties. Quite often they've got a portfolio which includes investment properties. So from a pure diversification perspective, they will probably hold on to those properties, particularly if they're actually performing reasonably well, but they're still growing their other portfolios, particularly bonds and stocks as well. So it's not necessarily an either or.
Yep. Okay. This is a bit of a question. That's this just for you, Martin. I have a technical question. John asks, I have a technical question for Martin. What software do you use for your modeling and graphics?
Okay. Well, yeah. So I basically, my core modeling is done on MS SQL Server. So it's an SQL, and I run a lot of that. Then I run some analytics tools across it, including Tableau and Excel. Some of the charts that I produce are out of those tools directly. But then what I do is quite often import those into PowerPoint. So a lot of the slides that I present on there are actually directly PowerPoint slides, as well as the Caliper tool, which is actually the modeling and geomapping tool. And then, of course, I've also got a whole bunch of tools that actually throw up graphics on screen, including what I call lower third. So that's when I put my name on screen or other things too. And that all goes into my hardware switcher. So the thing that actually makes the show and puts it out on air is actually a hardware switcher. It's a Blackmagic switcher, and that allows me to make all of these switches between different views and the incorporation of various elements. So it's quite a big integrated system that all works together to be able to produce the show. So that's the short answer. If you want a longer answer, I'll probably have to make a show about it, because there's a lot of moving parts.
All right. Well, we'll move on to the next question then. Okay. Asha asks, what is driving the rapid population growth in WA? Is it influenced by the mining sector?
Oh, do you want to have a go at that then?
Sure. Well, as you can see from the chart here, it is a bit of everything. There is a relatively decent natural increase, but there's also very strong interstate migration. WA is still a very attractive place for a lot of people in the east over here. While housing prices in places like Perth have gone up significantly, they haven't gone up as much as on the east coast, and they're still a lot more affordable in relative terms. But there's also a very, very strong level of net migration into Perth as well, and part of that is likely down to the mining sector. I think that's likely an accurate perception of things. But I think it's also just the fact that relatively speaking, the WA economy has been performing better for a while. It's even had things like lower inflation because of the way that they manage their electricity system and stuff like that. It has been a better place to be than in the eastern states, where people have larger debts and perhaps economic prospects aren't quite as strong.
Absolutely, and the overseas migration is very strong, particularly in some of the suburbs. And in fact, if you look at the more recent census data, it's quite interesting. Look at the origin of where people actually came from at a postcode level, and there are very strong concentrations of some Asian areas, Indian, as well as the UK and others too. So it is a mix, but I do think the migration, the overseas migration, is quite strong, and part of that is what Tarric, you just said. Property prices gone up, but they're still relatively better value than in Sydney or Melbourne, and that actually does have quite a big impact when you're looking internationally at Australia and say, where do I land?
Yeah, and it may sound silly, but I think it's also a time difference thing as well. Perth is 3 hours closer to Europe. It's 3 hours, in some cases it shares time zones with Asia. So it's a lot easier in that regard to communicate with people back home. And for some people, that's really important.
Yeah, good point. Absolutely. Yeah.
Okay. All right, now we are going to do something here, and we are going to step into the absolute crapstorm of controversy, which was Tim Gurner's comments about the construction sector. So I'm going to put my flame suit on, and we'll get into it. Christian asks, what are your thoughts on Tim Gurner's comments on productivity in construction? I thought your thoughts would be interesting.
Well, we better start with just recapping on what Tim actually said.
Well, basically, he said that unemployment needs to rise by 40 or 50%. Now, some people have said, well, 50% unemployment, what a nightmare. And that's not, in fairness to Tim, that's not what he was saying. He was saying 40 to 50% in relative terms. At least that's how I perceived it. And, that basically, Australians should be thankful that they have a job and yada, yada, yada. Yeah. And, just that, that people aren't productive enough and that they should be, thankful to their employer and a bunch of other stuff that he was then forced to apologise for.
Yeah, and interesting, the Productivity Commission came out with a report today and basically also had a different lens on this, saying, well, productivity isn't actually too bad. Well, maybe productivity in mining and farming isn't quite as where it should be, but actually elsewhere, maybe it's not as bad. I'm not sure I actually totally agree with them. But to my mind, the productivity question is the key question, right? Because clearly, if you look back from a trend perspective, you can certainly see a problem. But in the construction sector, costs have gone up, and quality of construction has gone down. Something else to bear in mind. We keep seeing that now in some of the faults that actually are shown afterwards. So I wouldn't suggest to you that the construction sector is necessarily highly productive.
Yeah, I'm actually, the data agrees with Tim on this one to a degree. And I emphasize the to a degree part. The reality is we were completing, almost double the number of dwellings in the early 1970s per capita as we have more recently. And that's kind of ridiculous when you think about it. Yes, obviously dwellings in the 1970s were a lot smaller and a lot less comprehensive than they are today. But in the 1970s, a lot fewer people had cars. And the idea of having something like a cordless nail gun or a power drill or anything like this in the hands of every single employee was a fantasy, was a dream. Yet I'll share a few little quotes from a tradie family friend of mine, and he's been working as a carpenter and doing other sort of work on building sites, residential, commercial, large scale for almost. He'll be coming up on almost 50. It'll be 50 years next year. He said to me, "There's too many chiefs, not enough Indians," which basically means that there's too many. There's too bloated of a management sector, and I think that is supported by the data to a degree. He says that basically people couldn't manage their way out of a wet paper bag, and I would say that that he's spot on about that, because I used to work on building sites myself, and too often the bloke in charge didn't have any idea what he was doing. And I think that's true. And I think the truth is that a lot of tradies are just as frustrated by this as the rest of us are at the lack of progress in making new homes, because there's a lack of coordination between trades that pushes out building times. Now I realize how difficult that is, because I've done that myself, but it can be done better, and it was done better in the past. And I think that there is some truth there that we can improve things, because, well, we managed to do a lot better in the past. Why can't we do that again?
I'm going to argue a lot of it's red tape. If you think back over the last 20 years, there's been a massive increase in certification and specialization. If you go back 20 or 30 years, you had general builders who did pretty much it all. Right? And they could have a small team and they could build something. Now you've actually got a whole series of people coming in and doing specialist things because of the legislation that forces people to specialize and to be certified here, there, and everywhere. Right? So if you look at the way that construction now works, it's a serial set of events rather than actually what would have done previously. And the other point I'd make is that the certification and signing off and all of those things is now done very differently from where it was previously. So again, I think that's a problem. And then the third thing I'd say is that the number of times I speak to people in the construction sector who say they have to do things multiple times because it's not done right the first time. they have to sort of go back and fix it again. Have to knock it down, build it up again. Build a wall or whatever. There's something about the way that stuff is done now, and maybe it's lack of quality control and all those things are there too. So I think there are some fundamental issues here which are probably right to think about. And the inefficiency of the building sector generally overall, there are a few star performers, but a lot that aren't. And the final point, of course, is we've now got much more high-rise than previously. And the complexity of building high-rise means it's a whole new ballgame in terms of what you need to be able to build stuff. And I think compared with the low rise of 20, 30 years ago, that could be another factor. So I think there's a bunch of reasons. Maybe the Productivity Commission should do a specific piece of research on the building sector.
Yeah, and I think that they should get out there and ask actual tradies what they think.
Yeah,
because I think that there's a lot of good advice out there. There's a lot of good foremans and a lot of good tradies out there. Yeah. I know one bloke who's a plumber. His job is literally going around cleaning up the messes of other plumbers who've screwed things up. Maybe they should go ask him. And I think that that's something that we really just need to look at. And I think that there also just needs to be a discussion about what level of work is acceptable. Because as you say, there are people out there who are just going out and just doing the same thing again because someone stuffed it up in the past. And although, I don't know. We live in a nation where 1 in 20 people is in the construction industry, which is one of the highest levels in the world.
Right. And if you look at the income growth that the construction sector have had, it's gone up quite significantly. So that has tended to suck in now people who maybe don't have particularly a heart in what they're doing. They're in there just for the money rather than actually anything else. And I suspect that's another factor.
Yeah, well, I hear that a lot because, my in-laws are overwhelmingly tradies, almost exclusively tradies on the male side of things. So I hear about that all the time. And yeah, I think they would agree.
Yeah.
Okay, next question. Executive Salad asks, will Australia reach 4.5% unemployment more quickly due to the huge increase in immigration? And do you think that this is a political ploy so rates can be cut sooner?
Oh, conspiracy theories. Oh, wow, I've never heard of that before.
Okay, well, first question, will Australia reach 4.5% unemployment more quickly? Yes, absolutely, it will. We are currently seeing a level of jobs growth in Australia that is historical terms, very, very strong. We created almost 28,000 jobs last month. That is around about, around almost 30% above the pre-COVID 5-year average. So it's still very, very robust levels of jobs growth. Yet, in trend terms, so not including all these various issues with sampling and everything else to the same degree, like the seasonally adjusted number, in trend terms, unemployment bottomed in September of last year, and it has been rising ever since, albeit at a relatively low rate of knots. However, what I've done here in this graph is we've over the year so far, we've averaged labour force growth of 38,000. So, and the pre-COVID level of average jobs growth is 22,000 per month. So what I've done here is I've graphed that out of if those two particular settings were to play out over the next, until the end of next year, by April next year, 4.5, we would see 4.5% unemployment and around about 5% by October. So I think that it's going to make the labour market treading water a lot more difficult as the economy sort of, slows. And I think it's just worth noting that 22,000 jobs a month is still a really, really decent number of jobs for the Australian economy to be producing, considering the size of the labour force. And also, this doesn't begin to factor in any sort of economic downturn, because if you see below trend levels of job creation or, God forbid, job losses in net terms, then unemployment could really, rise quite rapidly if this level of immigration continues.
Yeah, the unemployment question is a really important one, and clearly, with high migration, you're bringing more people in than you can probably find jobs for them. So there's probably a bit of a lever there. And if firms slow their hiring, because of the lower level of growth that they've now got. And the latest job application search from Seek showed a bit of a slowdown. There are some leading indicators. So absolutely, the impact of high migration is definitely going to have an impact. But I would argue that the biggest one is the slowdown in the economy. As you say, if we get into recessionary territory, that's when things go bad. And by the way, if unemployment starts to rise, that's going to put direct pressure on defaults and mortgage payments and everything else, right? Because at the moment, a lot of people are struggling with cash flow, but they're still in work. If that work dried up, that would be a whole new ballgame.
That's true. And I mean, as for the question, I think that this is more, the question about this being deliberate. I think it's, very much a case of sort of, to quote Bob Ross, the painter, a happy little accident. It's something that will benefit the RBA, that will benefit the government, that will make hitting those unemployment targets faster, easier. But I think the thing is that migration, at this level is there because it props up GDP, and it props up, demand for property. And, you can talk till the cows come home about the reasoning behind why they're doing it. And at the end of the day, everything we say here, none of it is gospel. It is all entirely speculative on our behalf, on our behalf, because we don't know the reasons why. The true reasons why they're making these decisions. I mean, one day we will. We might get some deathbed confessions, but we're going to be waiting a while for those.
Well, of course, the government papers come out many years later. It'll be too late then probably to pick them apart. But what I would say, Tarric, is that if you look at the migration question, it's not just Australia, right? If you look at New Zealand, if you look at the US to an extent, but Europe and the UK in particular, they're all talking about migration, although interestingly in the UK, there's now a bit of a pushback because people are saying, well, hang on a moment, the economy is not doing flash. Why do we need such high migration? So maybe there's going to be a pivot point ahead. But in Australia, it's full on, turn the dial up to 11, get as many people as we can. Why? Because it helps the GDP.
Yeah. Well, I mean, the thing is that if we look at history, and we, purely look at it through, not through the lens of intent, but just what happened. When the Rudd government increased net overseas migration to 300,000 in 2008, 2009, by doing that, they managed to avoid a recession in headline terms. And this is something that even the Treasury and the Federal Treasury has written papers on. Yep. That basically, without that, if you just had relatively flat population growth in terms of migration, we probably would have had a recession like everybody else. So, there is form, there is precedent there on that. And I mean, although I will say, if you look at things like rental vacancy rates, you look at all those sort of sets of data going all the way back to the early 2000s, what we are seeing now in terms of migration is unprecedented. We have never seen we've never seen vacancy rates driven this low by a migrationary surge. Shane Oliver from AMP had a good chart about that earlier today. And the reality is that I don't think we have ever seen immigration ramped up by 66, potentially, if some of these other numbers are correct, by up to 66% above the previous record high so rapidly before.
Yeah. Well, this is a deliberate strategy. I mean, it is, the levers have been deliberately pushed in that direction, and they can dress it up as to why and how, whatever, but the natural impact is it's going to actually create a huge amount of congestion, a huge amount of demand for resources, et cetera, and it's going to put unemployment up.
Yeah, well, I mean, exactly. I mean, unemployment's rising now, even though we've got jobs growth, really strong jobs growth, and it's unfortunate because it's going to be the everyday Australians, and not only that, but it's migrants who pay for this because they're the ones who are arriving into this train wreck of a housing situation. And while they may be the ones who manage to get themselves a home because perhaps they're of greater means, at the end of the day, someone ends up missing out, whether it's a migrant or whether it's an existing resident.
Yeah, well, people fall off the log. And interestingly, just one last point on this, the most significant growth in the rental stress sector are now amongst first-generation Australians. So newly arrived migrants who are finding that they're finding it really, really tough to be able to make those mortgage or rent repayments, particularly rentals. So it's quite interesting. So they're actually on top of the list at the moment.
I'll have to get you to send me that data. I'd be really curious to see how it's evolved over time. That'd be fantastic.
Yeah. I owe you some stuff from the other week. I haven't done it yet. Sorry, I've been too busy.
No dramas, mate. No dramas. We'll get to it. Okay. Next question. Now, do I have a slide for this one? No, I don't. Okay. Steve asks, AUD down, immigration up equals more purchasing power for foreigners to buy our houses with favourable forex. Will this help keep a floor under housing prices? Meanwhile, locals get hit with higher inflation and higher rates for longer.
The answer is yes.
Yeah, basically. I mean, we Australia, just a bit of sort of, data and figures on this thing. Australia is seeing the largest influx of high net worth migrants in the world of any country. And that's not in per capita terms, that is in nominal terms. So, 5,000 people who are defined as high net worth individuals are estimated to have moved to Australia in the last 12 months. So, yes, we are seeing that inflow of people who have the money to be able to just buy houses outright.
Yeah, absolutely. And, there's some who are investing as well as actually buying for own occupation, but it displaces those in Australia with less purchasing power and less ability to compete. So like I said, they're falling off the back of the lorry, they're falling off the log. And as we said earlier on, the affordable and social housing initiatives are so limited and weak that those guys are actually in complete limbo. And that's where we're seeing significant rise in financial pressure, but also social pressure as well. And so the net consequences of these highly mobile, affluent people coming in from overseas is they're displacing other people out.
Yeah, unfortunately. Okay, Justin asks, what is your take on Jeremy Grantham's recent comments about the risk of a housing crash and the possibility of high housing prices fueling a populist backlash in Australia?
Well, of course, the religion is house prices never go backwards, right? And it's still in my surveys. It's one of the questions that I touch on, and people still have this fixation that prices never go backwards. The truth is, they do, of course. And I just want to come back to the long-term trend of income to prices is we're 40 to 50% over where we should be. Long-term trend. So we're in a bubble. And so the question is, how long can that bubble go on? At what point does it reverse? And if it does reverse, what are the consequences? And that's why I've always said that there is still a scenario for significant house price corrections. And it's interesting that people are now talking about it in the US, they're talking about it in the UK, and I think we should be talking about it in Australia. There's a risk. But on the other side of it, as we said earlier on, the politics of it is no politician wants to actually see their own asset prices drop. A lot of them have investment properties. Nobody wants to actually be on watch when prices fall. So they're going to throw the kitchen sink squared to try and stop them falling.
Well, I think, this sort of, squares nicely with the chart I showed before of immigration and housing prices. They were willing to pull that lever to keep prices high with, the only ammo they had available at the time. And, I said a couple, I think it was last year, or it could have been the year before, here on DFA that, that the government will throw a lot more hopes and dreams of Australian households on the fire to keep housing prices high. And I unfortunately, I'm forced to stand by that view because that is basically what they've done so far. I mean, they've spectacularly thrown Australian workers and renters under the bus. Yeah. And I mean, if that's what they're willing to do, what more are they going to be willing to do when they have the scope and the fiscal firepower to do it, and they're not limited by inflation? It's a scary thought.
And I'll make the other point, of course, is the other issue is financial stability, right? So our financial system and the banks are totally leveraged into mortgages. We've got the highest proportion of mortgages as the total bank book anywhere in the world, I think. And what that means is if property prices were to slide significantly, that would immediately create huge financial pressures on the financial system, and financial stability would be at risk. And again, APRA and RBA and everybody is going to be worried about that. So they'll do everything they possibly can to keep putting the fingers in the dike So, for example, allowing banks to extend the life of a mortgage to 30 years and moving to interest only, etc., so they can keep the default numbers really, really low and can paint the picture of everything's absolutely fine in Australia when it may not be really. So, from a financial stability perspective as well as a political perspective, nobody wants to see prices fall.
No, and I think that the sort of one of the risk scenarios for Australian housing prices is similar to the Kiwi scenario. There's this idea, if housing prices fall 20%, the sky's going to fall and everything's going to implode and blah, 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 blah. But that's not what happened in New Zealand. Housing prices fell over 20% in Auckland. They fell very nearly 20% nationally. There are places like Wellington where they had, US housing crash level falls. And I would say if not for migration, that they would probably still be falling. And I just think that is, a scenario, particularly for, here in Australia, that is worth keeping an eye on going forward, because if we do see an economic downturn, we do see rising unemployment, that is going to be something that is potential on the horizon for us. And I think the thing is that housing crashes don't need to necessarily be disorderly things. They are. I mean, as I said, New Zealand's property price drop wasn't disorderly. Even Sydney's property price drop that we saw up until earlier this year wasn't disorderly. And with all of the various stopgaps and extending and pretending and everything else, I just wonder. Financial stability would be at risk if everything was truthful and everything functioned the way that it did historically. But, with the power of magic and everything like that, perhaps we can have a bit more of a greater housing downturn without anything breaking, mostly because we pretend that it's not broken.
Well, let me be controversial here, right? Magic is about misdirection, right? Don't look over here, look over there. Could it possibly be that the voice is part of that as well? There's a few issues, but we'll look over there and talk about the voice, and we'll spend a lot of time in the media talking about the voice because, that's maybe less of an issue than some of the other stuff that we should be talking about.
Well, if that was their intent, just hypothetically, it hasn't really worked out all that well for them. Okay, it's brought them a bit of clean air and it's brought them a bit of controversy and stuff like that. But we're going to reach the end of the year, shortly. And if the polls are correct, it will fail, and fail quite badly. It's not going to be, and I'm not even, I know that there's the whole polling controversy, but even if you look at polling that's done by organizations that are even somewhat aligned with Labor, it's a pretty negative viewpoint of how this is all going to play out. And I just wonder, is that going to damage Albo's political capital? Because it's not like he really has all that much left, because I feel like it's just sort of been slowly evaporating because he hasn't really done anything. And, as some people have said to me, they don't really have much of a mandate because they went to the election with a small target strategy.
That's a good point, actually. Yeah, well, interesting to see how it plays out. But I think some of these economic questions, and particularly the house price question, that will be the topic of 2024, I suspect. And it will be a force in two directions. One, dragging prices lower because people can't afford it, versus trying to find other levers that you can do to prop prices up, because that's what they've always done.
Yeah, I wonder, just how effective all these various means have been going to be, because, this is something that you and I have discussed previously, but during the pandemic, you saw, first home buyer and just purchases in general brought forward due to circumstances, due to the pandemic, due to lockdown, due to, change priorities, change perspectives, etc. Excuse me. So that brought forward a lot of demand. And now, with the issues with the rental crisis, I'd say that we're seeing further demand brought forward too. So, I do wonder if we were to see a more balanced market, how things will look, because in a lot of ways, the Australian market has been the opposite of a perfect storm in the last, call it, say, 6 months. Mm-hmm. You've seen depressed levels of listings, well below prior averages. If you go to the 10-year average, it looks absolutely abysmal the way things have been recently. Although, admittedly, new listings are now ticking up quite strongly nationally. But, and then on the other hand, you've had immigration at record levels. So you've had sort of decade low levels of supply and then record levels of external demand. So, I think that really just sort of needs to be the pinch of salt or the bulk carrier worth of salt when property market outcomes have been looked at over the last, say 9 months.
Certainly not a rational market, I have to say. At the end of the day, it's but it hasn't been rational for a good few years. It's been the object of political influence and intervention, central bank intervention, etc., etc. So wherever you look, levers have been pulled. Why? Because it's the biggest political game in town, and as I said earlier on, the stakes are pretty high if it goes wrong. Tarric, we've run well over our allotted time. Did you want to do one last question, or are we there?
I think the thing is the last two questions I've got here are pretty open-ended, and we could be going for quite a while. So
maybe
we may have to. We may have just. Yeah, I think we'll leave them for the next Q&A.
Well, but I want to say thank you very much as always. And the point we're trying to get to here is there's a level of uncertainty and vagary about policy, which I think a lot of people haven't really latched into, and we have to avoid the spin and avoid the political one-liners. There are deep-rooted questions here which should be being explored about the future of Australia, the future of the Australian economy, and how it functions for ordinary Australians. And at the moment, that is not a debate that's being had, and I think we are poorer for it.
Yeah, I concur. I mean, I think that it's something. I think the thing is that there are people who want to have it. And I think that there are even people in Parliament who want to have it. I've spoken to them myself, and I'm sure that that I wouldn't be. I imagine John hasn't. And I wouldn't be, and I imagine that perhaps you have as well. But
yes.
I think that we just need to. We need to just sit down and just figure out what actually matters and just what is actually. And I think not just about the fact that we can talk about homelessness or we can talk about property prices or whatever, but I think we just need to talk about what works for people in their daily lives, in terms of the economy, in terms of how they house themselves and these different things, and just across the spectrum at these issues, because the economy right now is not serving the vast majority of people. And that, if I was Peter Dutton, or if I was someone gunning for Albo's job, that is what I would be ramming home right now, that we are not serving the Australian people the way that that the government is not serving the Australian people the way they should, nor with the outcomes that they should.
Well, it comes back to two questions. What is the economy for in the first place? And then what is the right political settings to be able to actually steer it in the direction? To my argument is it should be to maximise, the life potential and opportunity for ordinary Australians. It shouldn't be about the protecting the 1% or protecting the big corporates. It should be about ordinary Australians and what they're able to achieve. And at the moment, they've lost the plot.
Yeah. And I think the thing is that in order to get the plot back, you need, in order to, boost things like home ownership or birth rates or whatever it is, you need vastly, vastly different settings. And one of those is more affordable housing, and it's more real wages growth. But, obviously achieving these things is very difficult, and committing to achieve those things is very politically risky.
Yeah, well, politics is about the art of the possible, some would say, but sometimes I think politics is the art of not being seen to be doing too much at all, but saying a lot about not much at all. Tarric, I appreciate your time today, as always, on the slides, and we'll do it again soon. And thanks, folks, for your questions. Those we didn't get to, we'll try and pick them up down the track, and I'm sure you'll throw more questions via social media for our next show as well. Thanks, Tarric. See you later.
See you later, mate. Bye.
Cheers.